coronavirus epidemic hogging the limelight, there are concerns over its spread and the impact on supply chains, but also hopes for an effective treatment and liquidity injections from monetary authorities. It is, however, still important to assess how the global economy was doing before the virus struck. Signals are mixed, but with some encouraging indicators, notably fourth quarter results, a buoyant U.S. labor market, and several advanced indicators and opinion surveys like Europe's manufacturing ISM. We will now have to contend with a fresh uncertainty over global momentum, but with a benign liquidity environment that will probably last. In addition, U.S.-China relations have temporarily eased, judging from the reduced tariffs on 75% of U.S. exports to China. Consequently, we are sticking with our asset allocation choices, and particularly Chinese and emerging country equities, in the hope that a rebound will occur after the sell-off. Equity markets rallied on news that China had cut import duties on 1,700 U.S. goods by 50%, and on upbeat quarterly results in the U.S. and Europe. Company indications for 2020 are generally positive, even though there is some caution on the impact of the coronavirus epidemic. There are some grounds for caution. Fiat Chrysler warned that they would have to shut a factory in Europe if supply chains in China were disrupted for a prolonged period. Burberry revised down its annual guidance after sales in China collapsed by 70 to 80% over the last 2 weeks. Nevertheless, the latest news on the virus spread has been relatively encouraging. Elsewhere, banks were underpinned by better-than-expected results at UniCredit and a surge in the Deutsche Bank share price after Capital Group in the U.S. said it had bought a significant stake. L'Oréal's fourth quarter results swept past expectations thanks to accelerating demand for cosmetics in Asia, including China, and strong e-commerce momentum. Neste Oil reported better than expected fourth quarter figures and announced an exceptional dividend, all thanks to sustained demand for renewable diesel fuel. Airbus received an order for 296 planes in January, its biggest in 15 years. U.S. Attorney General William Barr said the U.S. should take stakes in Nokia and Ericsson to combat Huawei's domination in the 5G market. The S&P 500 gained 1.9% and the Nasdaq 3% over the week on upbeat quarterly results and favorable economic data. Manufacturing ISM came in at 50.9, or higher than expected, and a robust 291,000 new jobs were created according to ADP. Some stocks continued to enjoy stellar performance. Tesla, for example, jumped 17% over the week, taking year-to-date returns to 80%. Tech stocks hit fresh all-time highs. Amazon climbed 9.6% on better-than-expected results. Health insurance providers Anthem and United Health rose 6.1% and 4% after the moderate Democrat Pete Buttigieg scored 27% in the Iowa caucuses, ahead of Bernie Sanders at 25%. Biogen ended the week 21.5% higher after the Patent Trial and Appeal Board confirmed that its Tecfidera patent was valid. The patent had been challenged by Mylan. Despite mounting worries over the coronavirus spreading, Tokyo staged a robust rally from initial weakness on growing expectations of long-term monetary easing in major countries. Excessive concerns were eased by news of a possible treatment for the virus, as well as the low mortality rate of the new virus compared to SARS. The Topix climbed 3.12% for the week. All sectors, apart from marine transportation, gained over the week. Panasonic, up 13.57%, surged on improving margins in its in-vehicle battery business. And Fujitsu, up 9.38%, jumped on robust demand for IT and software. The MSCI EM index had rebounded by a significant 3.8% as of Thursday's close, with Korea and China outperforming other regions. The proactive macro policies announced by the PBOC, A 1.5 trillion renminbi injection via reverse repos and relending were seen by investors as a clear positive signal. As the 1.05 trillion renminbi reverse repo is maturing this week, this amounts to an injection of 450 billion renminbi, or the equivalent of a 23 BP cut in the reserve requirement ratio. Beijing also said that tariffs would be halved on $75 billion of U.S. imports from February 14th as part of the Phase 1 trade deal. China's coronavirus epidemic has had some collateral effects on companies. Taiwan-based electronics group Hon Hai, Apple's main iPhone manufacturer, lowered its 2020 guidance to reflect the one-week shutdown of its factory in Zhengzhou, imposed by the government due to the coronavirus. And AirTAC, which posted upbeat fourth quarter results, will postpone the opening of its factory in China by one more week. Well, that's all for today. Thank you for watching. Subscribe to our channel to track the market pulse and get the latest economic data. Good luck trading.